All right, Bulls and Bears BX4 back in the building, back with another dose. Bull to the bus. Let's go ahead and get right into it. Please give us a like and get this video a little bit of traction so we can get the word out to let people know what's really happening, and hopefully more people can discover economic reality. All right, let's talk about the big story. Everybody's talking about it. In fact, the rate cut made national news. Here's how Drudge Report put it out here. Fed gets aggressive, cuts rates by 0.5%, the biggest rate cut since 2020. So think about it, the biggest rate cut since the pandemic shutdowns, right? All-time high unaffordability, worst time to buy a home as far as affordability, and we're cutting rates, folks. This is insane, but we predicted this. We predicted second half 2024, they want to keep the economy propped up no matter what. They're keeping the banks propped up, right? A lot of news to get into. And let's just talk about a couple things here. It's not going to make that much of a difference for car loans, for home loans. Maybe if you got a median price car, you're talking maybe $30 to $40 a month difference with this rate cut. But the Fed is even talking about another half a point rate cut before year's end, which will likely come in the form of 2 quarter point rate cuts. Right, so something to think about. And in fact, with this national news, headline news pretty much, not just on business networks, but for example, Drudge, as we're looking at again right here, it's actually a good thing. So if you wanted to pick out something positive from this rate manipulation, from this inflation monster that's not been tamed really, it's slowed down, but it's not been tamed. The positive part of that is more people are paying attention. More people, with the cost of living what it is, more people struggling to get by. People are paying attention and they're looking into the mechanisms here, the rate manipulation, the bank manipulation, right? What's being done today, if it was done in 2008, that bubble would have never went bust. They're out in front of this, folks. This is a whole new world. We're not going to see a crash. We're not going to see deflation unless we see something massive to bring it down. Now, we're going to talk about something that I think should be on your radar as far as the black swan, and something pretty massive that could bring this whole thing down, that could pretty much bring this whole rate manipulation, monopoly money to a halt. Am I saying it's going to happen? No, but it should be on your radar as a risk. Because if you've invested in anything, you should know it's all about risk. It's all about looking at the possibilities, the likelihood of something derailing the economy. Now, right now, the economy's propped up on lending, and they're back to the rate cuts, right? More people are going to be qualifying for mortgages, car loans. People that were priced out, you're going to have a few people now that are going to be newly qualified because of the slightly lower rates and slightly lower payment, right? Here's how they put it over at CNBC. Fed goes big with interest rate cut in a bid to head off an economic slowdown. Well, there's already an economic slowdown. We're going to talk about housing here, and Costco, right? Of all things, Costco is coming in with affordable housing. I'm not even joking. We're going to talk about that here in just a few minutes here. But first, let's talk about some other ways that this is being presented here. Powell pushes back on the suggestion that the Fed got behind in rate cuts. That's actually a headline. I disagree. Got behind in rate cuts. That means they should have cut rates sooner, right? Who wrote that? Tobias Burns. Should have cut rates sooner with price levels where they're at is insanity, folks. Insanity. And it goes completely against what we've been hearing over the past couple years, that the economy's strong, the consumer's strong and resilient, folks. The only reason the consumer has the appearance of being strong is because they can borrow more money. As soon as this lending comes to an end, then the prices and the cost of living start to come down. But we're going to see just the opposite, folks. This is inflationary. This is just the opposite of what we need. But again, it continues the illusion of economic growth. Inflation on the surface looks like economic growth because you have spending, which creates jobs. All right. And they look at the GDP, the gauge of economic growth. is based on spending. So as soon as people can stop, can no longer go further into debt, then the whole illusion comes to an end. Now, let's go ahead and take a listen to a Q&A. And of course, this is Mr. Powell here taking questions, and listen to what he said about more rate cuts on the way.
Excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though.
By the way, he was asked how many people on the Fed that voted for this agreed with the rate cut. It was pretty much majority.
Look at the SEP. All 19 of the participants wrote down multiple cuts this year. All 19. That's a big change from
everybody there wants multiple rate cuts this year.
June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of a follow-up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year?
We're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good.
I don't believe that. I think rate cuts are baked into the cake. There's too much going on. We're going to talk about housing here in a few minutes, and how the median home price is actually down much more than than most outlets are reporting. We'll get into that here in just a bit here.
Strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability.
You notice he said inflation's coming down, but prices aren't coming down. Prices are still going up, just less quickly. They choose their words very wisely, don't they?
We can, make a good, strong start, but and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
All right, enough of that. Enough of the propaganda nonsense, right? So, folks, we had markets mixed today. I was thinking that a 0.5 point cut like we saw would send some panic through the markets. But remember, it's the top 10% that own about 90% of all stocks. So even if every retail investor started hitting the sell button, you wouldn't see that big of a correction because the retail investors only make up about 10% of all stock ownership, right? It's insane, but those are the numbers here. Gold, $25.84, down a bit. Silver, down slightly, $30.48. Got the 10-year bond, 3.68%, and that correlates with mortgage rates. And we're going to see mortgage rates now go lower, of course, with this. It also has to do with how much debt that's being bought, mostly by the Fed, in my estimate. But when you go over to the housing market, you see that there's already a slowdown, and this is the reason for the rate cuts. Of course, they're not saying that this is the reason, right? They're just pointing to inflation, but actually housing is showing some weakness, and this is the Fed's numbers. Now, actually, I trust the Fed's numbers more than Zillow, more than Redfin, more than the NAR, National Association of Realtors, because all those other outlets have a vested interest in making the housing market look as strong as possible, because that's how they make money. Of course, real estate commissions, all those things. But look at the Fed chart here, right? Go to all the way to the right edge here. As of the second quarter this year, 412,000, down from the peak, and they have at the peak fourth quarter 2022 at 442,000. So much different than the Zillow, the Redfin, the National Association of Realtor chart. So, folks, this is the reason why I think they're doing this. Also, sales close to all-time lows in the housing market. Delinquencies rising on credit cards, car loans. Debt levels, again, all-time highs, getting higher all the time. Only made possible by the banks with zero reserve requirement. We're going to see what happens in October. October, multiple things coming up here. Possible big step forward in de-dollarization with the big BRICS meeting. And they could be making a major announcement. We'll have to see how it goes. Combine that with lower rates, folks, we could see a storm hitting very soon. And some people would say that this is already the beginning of the storm because debt levels and people's ability to make ends meet is already the lowest it's been in a very, very long time. Also on the housing, yes, housing inventory here on the topic of housing. Look to the far edge here, all the way to the right there. We've got inventory, the highest that it's been. Let's see, 909,000. We have to go all the way back to May 2020, just entering the health crisis before you get to inventory levels that were this high. So median prices down, inventory starting to rise, the highest that it's been in over 4 years, close to 5 years, 4.5 years. Folks, so this is what's going on with the housing market. They don't want this housing bubble to go bust. Mortgage rates are actually already starting to go down before this rate cut was announced. We're looking at a 1-year chart here, significantly down from the 7.79% that it was back in October 2023, folks. Latest reading down to about 6.2. Of course, that's going to vary depending on where you're going to look for your mortgage. Speaking of housing and high home prices and real estate, let's talk about Costco. Costco building a center in Los Angeles with 800 apartment units to break ground this week in Los Angeles. And let's see if we've got any video from this.
And a giant Costco. And while it still needs approval, many people are hesitant about whether it's a good idea for the city. Eyewitness News reporter Rob Hayes has more on the development and local reaction.
Fences, weeds, and a whole lot of nothing going on. But if the latest plans go through, this Crenshaw lot could be sporting one of these. Yup, a members-only warehouse retail monster, Costco.
Oh, wow.
It would be good, so my mom won't have to drive way far away.
The developer, Thrive Living, calls it a game changer that would create more than 400 local jobs. But here's what's really unique about the proposed Costco project. It would also include 800 apartment units built over the store.
800 units.
Neighbor Larry Kidd says the issue would be parking. And if you've ever been to a Costco...
Yeah, they better have some good parking. Imagine living there and having to compete with Costco shoppers, right? They better have a parking ramp, one of those parking structures just for the tenants of those apartments. And I'm guessing a lot of Costco employees, especially long-term employees, might take advantage of these apartments. So imagine, if Costco prices are good, I mean, I guess you could say they're good if you buy in bulk. But will this solve any sort of housing crisis? And what if more Costcos do this? Thrive Living plans to use the 5-acre site, a mixed-use complex that features the members-only warehouse and residential units, 184 units set aside for low-income tenants. According to the developer, the units will be offered as non-subsidized, affordable, and workforce housing. LA Mayor among those attending the groundbreaking ceremony. So there you go. Just when you thought Costco couldn't think of anything else, you have them getting into the housing business now. So we do need affordable housing. All right, well, let's jump over to a couple other items here I wanted to bring up here. With the rise in automobile loan delinquencies, what's going on with Ally, one of the biggest auto lenders? Ally stock, looking at, let's go out to a 1-year chart here. Not looking so good. We saw this huge drop from the peak. It was at about $45 actually. Dropped down to $32. And since then, went up to a little over $34. Is any one of you doing the dip buy on that because of a significant drop? I'm not. I do look for dip buys. I'm actually not at this point. I don't like all this this mix of risks out there with the dollar de-dollarization, with the BRICS meeting coming up in October. The new bank rules that may or may not be implemented, we'll have to see. Now the rate cuts, the all-time high debt levels. There are some stocks that I'm looking to go short on, maybe do a put option, meaning making money on the downside. But I'm being very cautious right now because I think there's some big things out there happening. Something I've tried to put out there, one of the black swans, is I think we're going to see a lot of criminality out of a lot of very well-known people. And if you saw the news, you probably saw Diddy, P. Diddy, whatever. Does he have a P in the front of his name? Does he not? Diddy. Did he do it? Yeah, he did. And I like to say Diddy didn't kill himself. Right? This whole thing, it's big, it's wide. And that's just the tip of the iceberg, folks. We got the banking system, a lot of things happening in the banking system. Were the banks, including the central banks, colluding to keep home prices high? Were they colluding with the government to keep home prices high? Remember, higher prices, more you pay in taxes, right? Everything you buy and sell with higher tax or higher costs, taxes are more, right? Because taxes are a percentage of your purchase price, whether you're talking about a trip to the grocery store or housing and your property taxes, right? I think there's some bad things going on, folks. Will it be uncovered? If it does, I think that could bring this whole thing down. Unless it comes out, if it doesn't come out, it's just more upside, more inflation. And these bankers are just going to continue to inflate. More people are going to get pulled under the wheel. So more people are going to need programs, down payment assistance programs to help people just make ends meet. More of the same. If Miss Harris wins, we've got a nationwide home buyer assistance program that's going to be another inflationary force in the housing market. So something massive has to bring this down, folks. If it doesn't, then it's going to be more to the upside, more inflation, more pricing pain. What do you think about this, folks? The rate cuts, Jerome Powell's comments, Costco housing, whatever it is, let me know down below. I'd like to read your comments. I'll have some time, hopefully, today to respond to some of these comments, right? Please make sure you're subscribed. Help us keep alive and help us stay alive. And we'll talk to you, everybody, very soon. Keep stacking, as always. Bye for now. Peace.